Hello, everyone. Welcome to Wall Street for Main Street podcast. My name is Mo Daoud. I am the founder of Wall Street for Main Street, and today's special guest is Fabian Calvo, the founder of Fabian for Liberty and the Note House. Fabian, thank you for joining us again.
Hey, it's a pleasure, Mo. Thanks for having me on.
So, I want to start off by talking about the economy and all the recent events that's going on, because there's a lot of uncertainty in the economy right now. If you think about it, Obamacare and who knows what's in that bill because it's 1,000 pages. All kinds of regulation, taxes. There's a debt ceiling. Who knows what's going to happen there? I think they'll make a deal and keep raising it, kick the can down the road. You got the tax hike. So how has that affected you as an entrepreneur?
It's a good question, though. For me, I believe in the concept, really, and we'll get into the economy and my thoughts on it, but I really believe in the concept of there's always two economies, right? So there's the global economy that we've just talked about, the American economy that you commented on, and there's really your own personal economy. And I think that one can have success and opportunity and prosper in their own personal economy, regardless of what's happening in the global financial markets. And so, for me, I really am somebody who's always conscious of what's happening in the economy. I mean, the news, in my opinion, it gets worse by day, and we see the actions of the Fed printing more money and everything else taking place, and just the outright manipulation in really all asset classes. But for me personally, I try to focus on where there's opportunity. I think there's a tremendous amount of opportunity right now in real estate. I'm a big believer in gold and silver and things that will have tangible value. So that's my thoughts personally. I try not to let it affect me, but again, of course, being an entrepreneur, it does. And, I see my employees, for example, their payroll taxes go up, and we look at this recent, we look fourth quarter GDP, now contracting, and, they're claiming it's because of the 22% in cuts from military spending. But even with all of the printing, though, that's going on, all of the manipulation taking place, you still have an economy that is not growing, that is contracting. And keep in mind, that fourth quarter didn't even take into account the new payroll taxes. So it's going to be less money in people's pocket to spend. So it's really just amazing, the different actions you see coming out of Washington and how eventually, in my opinion, they'll lead to financial ruin for the country and some kind of reset that will take place.
And that's an interesting point, because I'm seeing a lot of CEOs and small business owners that are making cuts on their payroll by laying off people, cutting their pay, and et cetera, all due because a lot of uncertainty going on with the Obamacare, the tax hike, and the debt ceiling. So it's kind of sad to see that this economy has become centered on what kind of policy the government is creating.
Yeah, I mean, it's an interesting point, Mo, that you bring up, because it's one of the reasons that really a lot of times that I'm asked about just the economy and people that, what perhaps an industry they should get into or things that they should do. And I think there's a few of them, but one of the bright spots here, I think, or the silver lining, if you will, is that, for the millennial generation, for people that have suffered in this economic downturn, I think people that realize what's happening, they realize what's the fundamental shifts that are taking place in the economy. I think if they adapt and they try to make the move into becoming an entrepreneur, I think for them there's a lot of opportunity. I mean, I think there's still growth around the globe with different sectors. There's still a tremendous amount of opportunity in different industries and asset classes. So, I think people need to use this time to just finally come to the realization that government will not save you. Government is the problem. The banking cartels and the Federal Reserve, they're running and manipulating this whole system. It's basically the very wealthy elite at the top are stealing all the money via inflation, and then the people have to pay for it. So if you have that type of environment, my suggestion is that you try to break free from it as much as you can, become an entrepreneur, learn something new, get into something new that can, that you can live a prosperous life, and you're not basically a slave to what happens and what are the results of these corrupted politicians and central planners.
And, and I agree right there. I think people should. I think if the economy gets worse and people get laid off, I think they should expand their skills and their knowledge in other areas so that they're not relied on their job or the government to help them out or bail them out. So I want to shift gears here and talk about one of your expertise, which is the real estate market. So the real estate in 2012 had a pretty good year. Commercial real estate was up 10%. The Case-Shiller indexes revealed the fastest year-over-year growth since the mid-2006, with the 10-city composite rising 5.5%. So let's talk about 2013. What are your expectations for the real estate market this year?
Well, outside of a currency crisis and a rapid rise in interest rates, I think, which I don't expect that to happen in 2013, although it's definitely possible. Eventually, it will happen. I'm forecasting, and my company, the Note House, is forecasting that out at least 2 to 3 years down the road. But eventually, that currency crisis will hit. However, as it stands now, I think real estate. I can tell you, Mo, from firsthand experience, as somebody who's on the front lines of buying bank-owned properties, REOs, non-performing notes on a daily basis, that there is a massive amount of capital moving into the market. I think investors are making a play towards something tangible, and so I think we'll continue to see increases in asset prices in homes. Now, also keep in mind, though, that the reason we're seeing prices go up is partly because you have the investor demand that's coming in, but it's also because of the tremendous amount of manipulation that's happening at the Federal Reserve buying the mortgage-backed securities, but also the government agencies like FHA. For example, in the last year, over a third of new home purchases have been loans where only 2% or 3% down payments were required. So they're literally trying to reinflate the housing market and reinflate that bubble by providing cheap liquidity into the market and basically, making loans to people that can't afford a 20 or 30% down payment, like has always been the conventional underwriting from a few decades back. So we have that going on. So we have the Fed manipulating. We have government agencies like Fannie and Freddie in collusion with the big central banks that have tens of millions of homes. I mean, the inventory is tremendous. And what they're doing is they're just slowly releasing the inventory. So instead of flooding the market with these foreclosures, they're releasing them very slowly. And, of course, that's, I hear a lot from investors, there's little inventory. Well, that's not really true. They may just be looking in the wrong place. There's a tremendous amount of inventory in non-performing notes, and there's still over 900 banks on the FDIC troubled bank list. So I think that there's a tremendous amount of opportunity in the short term for real estate, and I'm saying probably 2 to 4 years, 4 to 5 years on the long end, on the short end 2 years, where people that know what they're doing can get in to make money. Now, that said, I want to stress that people can make money in any market, right? I mean, when the market collapses, there's going to be people lined up ready to take opportunity of that. But I think right now, for just the average person that wants to learn something new and get into this asset class, I think there's a really good opportunity there.
So, in conclusion, do you think there's another housing bubble forming here for the next 2 to 4 years? But it won't be like what we had in 2000, where we had that humongous bubble. We had the credit default swap, and we had subprime market collapse. It'll be something smaller version of that.
Yeah, Mel, I don't know, to tell you the truth. I mean, look, when we see the actions of the Fed, and again, fourth quarter GDP is contracting. So if I'm Bernanke, and Bernanke is clearly clueless when it comes to what it really takes to grow an economy, what are the fundamentals of real growth in the economy. I mean, that's basically out the window. But if I'm him and I look at how he's been thinking before and the different papers and white papers that he's written about, fighting deflation, he's probably thinking, well, I need to create even more liquidity. I mean, the Federal Reserve president for Minneapolis is basically saying we're not doing enough, and inflation is still low, at least by the way that they measure it, is still low enough where we could even up the ante on the QE. So if I'm him, I'm probably, he's probably thinking, I need to do, why wouldn't I do 150, billion of mortgage-backed security purchases a month? So, there's no telling what this government's willing to do. You mentioned the debt ceiling earlier. Yeah, most likely the Republicans are going to cave and they're going to increase the debt ceiling again. But there's going to come a point where I think, as more and more people, and, you may have seen this yourself, are awakening to what's happening in the economy, I think you're going to get a lot of pushback. And I wouldn't be surprised at some point to see Obama, basically use executive orders to just say, we're going to do away with the debt ceiling and even have, we basically can just continue to spend unlimited amounts of money. Because, when I look at a government that is barring Egan Jones from being able to rate their credit score, if you will. When I look at past governments that have always thrown the inflation index out the window at a time when inflation is rapidly increasing, history tells us how reckless governments will get when they reach the end of the road. I believe we're at that end of the road, and so, there's no telling what they'll do. No?
And yeah, and you see a lot of the younger population starting to buy their first new home, and how can you blame them when you see the 30-year mortgage rate, where they're now below 4%, and for some of them it's cheaper than renting an apartment. So you see a lot of them, as you say, put 2 to 3% down to buy a mortgage or a house. And, it's hard to put down 20 to 30% because if these houses are increasing in value, you combine that with their declining value of our dollar, it's hard to put down 80 to, $100,000 down payment on a house when it's, very hard to save nowadays.
Yeah, look, the millennial generation, you mentioned young people born between, let's say, late 70s, early 80s to the 2000s. It's about 12% larger than the baby boom generation as a demographic. And, what's stopping this government from beginning to say, we're just going to start making loans to people? First-time home buyers, you can get a loan, we'll finance 100% of the purchase price, and again, try to fuel that bubble. Because if the bottom line is that if we don't have this, if they don't continue to print and manipulate, it's game over. The entire economy will just completely fall apart. They have to know that that's the reality. Even with all the efforts, it's not working. So they'll continue this. They'll probably get even more desperate as their policies continue to show that they're just not working. So, but back to your point that, look, if you're somebody who is renting a place and you can buy somewhere and you can get a loan and get a 3% interest long term, and you're going to get a good value on the property and it works for you, buy it, but I think that if you're buying it 3% interest rate and it's a place that you're going to live there and you're going to enjoy it, then by all means buy it. But again, if you're going to buy it to think that it's an asset and you're going to buy it because it's going to go up in value, it may go up in value short term. I think nobody can predict long term. So, my thoughts, my suggestions are if it's a home for your family, a home that you like, a home you could afford, you could get a 3% interest rate. It's not a bad opportunity. In certain markets, I think you'll do all right. The other point to that too, though, is that, when you look at some of these housing markets, you take a market like Atlanta or Tampa, Florida, or Cleveland, Ohio. These are markets that we invest in a lot at the Note House. You're looking at properties that you could buy, even in the Carolinas, really all over. You're looking at properties that you could buy, at 30%, 25%, 35% of replacement cost. And, that's extraordinarily cheap. So, you couldn't even build these homes. You take a market like Detroit that has been, that we've bought a lot of properties in Detroit and resold them, and that market's just been obliterated, devastated. And you could buy a home there, a brick home that you wouldn't be able to build today for $200,000. You could buy it for $5,000. You can buy it for $1,000. So, those prices are extraordinarily low. And again, that's why I'm bullish short term on the real estate market.
I was reading a Forbes article a couple of days ago, and the chairman of Case-Shiller Index said that the housing market will never get back to pre-crisis level. before the 2008 crisis. Do you agree with that?
Again, first, the increase in the Case-Shiller index. I mean, it's still down like 50 to 70% below its high, and I think that again, you have a lot of manipulation that's causing the asset prices to increase. A lot of it is just this bank manipulation and these federal agencies and big banks colluding to make asset prices go up, right? Because a lot of these banks, like I mentioned, there's still over 900 banks that have troubled assets that are in the trillions of dollars, troubled mortgages. Take a look at the commercial real estate market. Last year, over $1 trillion worth of apartment loans or commercial loans, started to come due. More than 50% of those loans, Mo, are underwater. So what they're trying to do is they're trying to artificially increase asset prices so then they can try to unload some of this toxic debt that they have on their on their balance sheet. So, again, I think government is I mean, they'll do some crazy things, Mo, and I don't put it out of their reach, or I don't, put it out of just me thinking that they will pull out all the stops in reflating this housing bubble. So can it get to be more? I mean, who knows? I mean, they have the propaganda outlets ready to push it. They have, so it could happen. I wouldn't rule it out.
Okay, so let's shift gears here and talk about the Federal Reserve. The FOMC minute from yesterday's meeting revealed that the Fed will continue with their $85 billion QE program. There's a lot of talk that they might pull the plug after this year because they think the economy is going to improve, unemployment is going to go down, which is also manipulated, as everybody may or may not know. So do you really think they're going to pull the plug after this year? Because I really don't think they have the guts to do that. That's going to cause a lot of trouble in this economy.
Yeah, I mean, first off, who's going to fill the vacuum, right? So the Fed stops by. They've increased their balance sheet from $800 billion to over $3 trillion. The estimates are it could hit $5 trillion by 2015. And I mean, who's going to fill in? What sovereign is going to come in and start buying T-bills? Or mortgage-backed securities, especially when you had the Chinese, the Germans get totally burned buying MBS. So I just don't see who steps in. They have to know this. No, they have to know it. The only way that I could see them get around it is if they just stopped measuring it, or they just stopped making official announcements about it, and they just were doing it under the table. I mean, look, we had the other day the guy who runs the Sovereign Wealth Fund for China, come out and say he's very worried about the Federal Reserve and their printing, and how America should basically stop printing. For every dollar Bernanke prints, it's another kick in the shins to U.S. creditors. So they can't possibly think they could continue this. Now, my theory on this, Mo, and this is maybe a little controversial for people that aren't maybe don't know history or just think that this is controversial, is that the Fed, the central planners, I think they realize we're coming to this end game point, and typically history shows us this is followed by the currency wars are breaking out. It's followed by some kind of global war. And I think within that global war, and you see a lot of the battle lines, if you will, being drawn now. After the currency wars come the world wars, and after that there'll be some kind of global reset of the economy. Now, the U.S. is lucky that they're holding tons and tons of gold from other countries around the world. They might say, look, we're keeping this and we're going to back our currency, and we're going to give you the new gold-backed currency in exchange for your gold deposit. So you never know how this is going to pan out. I have the opportunity to speak to just very, very influential multi-million-dollar hedge fund managers and some reputable economists, and everybody, including myself, I think you would agree with this, would say that if the Fed had taken the action they've taken to date, this economy would have completely collapsed in the Great Depression. That would have been much worse than the Great Depression that we had in the 1930s. And so they realize that, and so they're going to just keep doing what they're doing until it just basically hits the end of the road.
Yeah, and if you look at the trends of what's going on around the world, there's a lot more countries that joining this currency war. We have Japan that's that's pledging that they're gonna print money. We have Korea that's joining the currency war, and we have all these other countries that's gonna print so they can stimulate their export market and get the economy going. So yeah, the currency war is going to continue to get bigger, and then if you look at history, like World War II, which started after the Great Depression, I think we're going to have another global war in this country so that people can forget about the economy.
Yeah, I mean, look across the country. We have Argentina, basically, on the beating their chest against England over the Falkland Islands. We have the situation in Syria, where we had Israel attacking some kind of military installation or something over in Syria today, totally just unwarranted, attacking a country that can't even hold their capital against Al-Qaeda funded rebels by the West. We have the situation with China and Japan, where we have fighter jets. That situation can just boil over at any time. We have the French in Mali. North Africa's on fire. I mean, it's all over the globe. You look at, and then you top it off with these secessionist movements that are spreading through Italy, through Spain. So, yeah, I mean, there's no doubt in my mind we have these battle lines being drawn. And the battle lines, once this breaks out, it's going to be a rush towards physical assets, right? And we're seeing this already by Germany, Venezuela, some of these smaller countries like Uzbekistan, Kazakhstan that are repatriating their gold, saying we want our gold back, which is a very smart move. And, what happens when China basically comes out and says, listen, we want to trade our treasury bills for some gold because we don't trust the U.S. dollar. I mean, I think the U.S. would look at that as a sign of economic terrorism, if you will. So, the fuse has been lit, and there's just a lot of different ways that this could go down. I don't think anybody knows exactly how it'll go down, but one day, we'll wake up. There will be some event. What it is, I don't know, but that event will completely change the course of history.
And Gerald Valente would say that current events form future trends, and the current events that we're seeing now look like we're headed toward another depression and global war type of world, unfortunately.
Not even, and that's true, what Valente says, and I would just also say history is a good indicator. I mean, we have 5,000 years of recorded history, and this has been going on since the Greeks and the Romans. But, my point is this, Mo, right? So we started our talk with, me saying that there's always two economies. And the reality is that this is what we're facing on the global economic stage. But within all of this, and as dire as sometimes it sounds, I always think of it as being a realistic optimist, if you will. I'm dealing with reality, but at the same time, there's tremendous opportunity. Before we went on the program, we were talking about, organic farming or agriculture. That's tremendous opportunity for people to get into. We don't have enough farmers in this country. The average farmer's in their 50s, I think, and, in the next 10 years, they'll be in their 60s. We don't have enough geologists in this country that can go explore mines and find new sources of commodities or oil or whatever it may be. So, there's so many different opportunities right now taking place. I think it's there for the entrepreneur to seize. And if I'm somebody listening to this and, I'm looking for some kind of new direction, or maybe I've lost my job, I'd really strongly urge that you take hold of your own life. You try to become an entrepreneur in whatever different industry. It could be real estate, it could be stocks, whatever. I don't know. You need to decide that. But I think that, knowing everything we know, I think you still have to just take action and kind of do the best with what you have.
Oh, I definitely agree. I think there's a lot of opportunity there despite what's going on in the economy. High demand for geologists, miners, and more entrepreneurs to create and innovate new things that will create capital and jobs. So, Fabian Calvo, I'd like to thank you for coming on the Wall Street from Main Street podcast. If people would like to find out more about what you do, where can they go?
Yeah, they can go to thenotehouse.us and they can subscribe to my newsletter if they're interested in real estate. If you're interested in more economic forecasting or political commentary, they can go to FabianForLiberty.com. I post all my YouTube videos there. They can also just Google Fabian for Liberty or The Note House, and they'll get more info.
Okay, great. Well, thank you for coming on. I appreciate your time.
Thanks a lot.